Hi, everybody. This is David Skrika, editor of addictedtoprofits.net. And today I have another David on, David Watkinson, right? And he
Yes.
he is the CEO of Emergent. Some of you might have known as M Gold in the past, but they've changed their name and still the same ticker, EMR, on the venture. And it's a company I've invested in. I'm doing, I'm helping them out too as well in terms of like a campaign. I've done it in the past as well, and they have some really interesting things going on. They're in two excellent areas that don't really have any geopolitical risk in terms of operations in Nevada and Quebec, and they've got it's a great property play in terms of they have a slew of properties in both and they're also got exposure to gold, copper, etc. So he'll tell you a bit more about the company and we'll talk about what their plans are going forward. They also, what I really like about the company is they have a JV with Rio Tinto, with Rio spending the majority of the cash, which is always a good thing. So you don't have to burn through your cash, especially in a tough junior market right now. So thanks for being here. And just so you know, with all of this, the company actually only has a roughly $5 million market cap. And because they did do a rollback, the share structure is very tight, which to me is always really important in a junior as well. Because, especially when you're in a new, at some point when this market bottoms and turns higher, it's always nice to not have a lot of stock overhang, that sort of thing. So thanks for being here. If you want to tell us a bit about what's going on at the company, I know you just completed a financing. I actually took a small part down myself, and just tell us about what your plans are and which properties. I'm going to put up on the on sharing the screen here the properties that are basically your main property, all your properties, but tell us the ones you're really focused on, etc.
Sure. So Emergent Metals, we restructured the company last year, and we have a very tight share structure. We have about 22.5 million shares issued and outstanding at this point in time. So our market cap is just 6 million. We're right in the middle of doing a financing. So we closed the first tranche of the financing, and we expect to close the second tranche by the middle of the month. So our business model we adopted a couple of years ago is suited for a junior mining company. We adopted an acquisition and divestiture model, which we think is suited to the business that we're in. What we do is we go out and try to find high quality exploration properties, often adjacent to existing mines or existing projects, and we try to acquire them in a down market and ultimately add value to them by re-evaluating historic data on them, doing additional exploration. But our goal is ultimately to monetize them through sale or joint venture or other type of business transaction in a relatively short period of time. So a lot of junior mining companies get into the business thinking they're going to find a exploration property and become a producer. So spend several years doing exploration, get into the permitting process, and ultimately try to raise money to bring a property into production. The time frame for doing that now is 10 to 20 years. So it's a very long process, and companies go through various commodity cycles during that period, and many juniors fail doing that. So the model we adopted is based on trying to look at the first area of what we call the life cycle of mining projects. So there's kind of a curve you can look at where the value of a company goes up as you're delineating resources, and once you have delineated a resource and move into the permitting process, usually the value of your company goes down because your stock sits there for several years as you go through permitting process in the U.S. typically is taking anywhere from 3 to 5 years if you're going to become a producing mine, and can sometimes take longer. So we are focused on that early part of the curve where we try to produce value in a much shorter period of time. So we were successful doing that with several properties. We acquired the Troilus North property in Quebec, and we quickly flipped that to Troilus Gold Corporation for cash and shares. We acquired a property called East West in the Val-d'Or mining camp in Quebec, and we flipped that to O3 Mining this year for cash and shares. We did a transaction where we acquired the New York Canyon property in Nevada, and we ended up doing a transaction with Kennecott Exploration Company, who's a subsidiary of Rio Tinto. So they're going to spend up to $22.5 million US to earn a 75% interest in that property. So it's probably one of our core assets at this point. It's a copper skarn and porphyry system that we hope through exploration will end up being a major mining project in the future. We're excited that Kennecott is there as a partner. They spent about $5 million last year, and they'll be coming out with their budget for work that they have planned for next year, probably in the next couple of weeks. So we're kind of waiting to see what they're going to do next year, and expect that they will doing additional drilling on the property during the following year. So New York Canyon in 2023 is going to be, an exciting project for the company, and Kennecott is spending all the money to advance it at this point in time. Our main asset still on the gold side is a property called Golden Arrow, which is in Nevada near Tonopah. So it has a 300,000 ounce measured and indicated resource, and it has a plan of operations and an EIS completed on it, or I should say an environmental assessment, an EA completed on it, that allows us to move forward with a major drilling program. So that's something we're going to be, a project we'll be looking to advance next year also. So we did work last year expanding the claim block to the south, doing geophysics and soil sampling, and identified a number of new satellite zones in addition to the current resource areas that are there. So we'd like to continue on with the exploration work on that property. Another asset we have is called Casa South, which is directly south and abutting Hecla's Casa Berardi mine in Quebec. So we did some drilling there last year, and we'll be looking to do some additional drilling there. And obviously our goal is to make a discovery on that property, and hopefully if we do, we'll be able to do some sort of transaction with a company like Hecla that has an operating mine adjacent to us. So that certainly would depend on exploration success. We have another exciting property, I think, that we acquired this last year called Trecasson, that's also in Quebec. So it's about 50 kilometers north of the Val-d'Or mining camp in Quebec. And it had been drilled in the past by another junior company, and had some very high-grade intercepts. So we're going to be looking to drill that. We may be starting late this year and going on into 2023. So we think that we should be having some good news coming out on that property if the drilling's successful. So we have a lot potentially going on next year in the company, and I think it's going to be an exciting time for us.
Yeah, and I just so you know, while you've been talking, I've been basically on your website clicking, all the to all the properties, and I'll send a link to everybody, because I think these are like your your website is excellent in that all the overviews of the properties, it's very simple. It there's an outline of where the properties are, the potential royalties and that you have in them, and then also like information on the properties, et cetera, et cetera. So, and of course, being that diversified is that you're not just putting all your eggs in one basket. You're looking at one of these properties potentially being a find, and like you said, a couple of your JVs, the JV partner is actually spending most of the money. So again, you're not having to also overextend yourself financially with 5 or 6 properties.
Yeah, we definitely like the idea of finding partners for the properties, and the deal with Kennecott, could be a company maker for our company if they're successful in delineating a large deposit. So it's going to be a number of years that they'll be doing exploration there because of the size of the project. It has potential to be quite a large copper project. They'll be doing work for a number of years before they earn their 75% interest. It could be a company builder on its own merits. We'd obviously like to find a partner for our Golden Arrow property to advance it. We would like to find an operating company, hopefully, that would be interested in taking it on and advancing it. It's got like I said, about 300,000 measured and indicated ounces. So we'd like to see it grow to at least a minimum of 500,000 ounces and potentially more than that. It is an advanced property. And then we have a number of other assets that, I haven't talked about that are also quite interesting. We have 3 properties around the Rawhide mine, which is an operating mine in Nevada, that was in the past a Kennecott operation, and it's operated by a private company now. But they lease one of our properties, and if it's brought into production, would produce a royalty cash flow for the company. And then we have royalties on the 2 properties in Quebec that we divested of to O3 Mining and Troilus Gold. So we have what I think is a very good mix of assets. We've done that for a reason. Like a lot of analysts would say, focus on one asset in the junior market, but you have considerable risk if you do that, and you're not successful in exploration or permitting, or for other reasons you can't advance the project. We have taken an approach of diversifying the company into a number of assets, including assets that have gold and silver and base metals. And we've looked at focusing on Nevada and Quebec because they're 2 of the best jurisdictions to work in North America as far as mining investment and finding partners to work on projects. And in Quebec, you have tax advantage investment through super flow through, where investors can invest in your company and get tax credits for essentially acquiring shares in your company. So it makes it easier to raise money as a junior for assets that are located in jurisdictions where there is flow through or super flow through in Canada.
And actually, this is just a quick question, because you were mentioning, some of these properties do have a 43-101. What would you say right now the current, like, proven probable resource would be, like, total at the company? This doesn't obviously mean it's economic or you're going to go into mining, but what would you say as, like, all the properties kind of combined?
The only one I can really talk about would be Golden Arrow that has a technical report done on it. The other ones, there have been, like New York Canyon, for example, had a technical report that was done in the past by a predecessor company that outlined a copper resource on it that was in the oxide skarn area of the deposit. But it was done by another company and not done by us at this point in time. And because Kennecott has it, we're waiting for them. They don't necessarily have to produce an NI 43-101 report like a junior does. As a senior company, they'll wait probably until they have a significant resource drilled off before they really talk about it. Whereas a junior, we would probably be talking about it and have a number of reports that we would do almost on an annual basis. So,
okay. So, just to finish off here, so you said, so in 2023, you're looking at basically drilling on roughly what, 3 or 4 of these properties?
Yeah, I think Kennecott will be drilling at New York Canyon. We're going to be looking at drilling at Trekison and potentially at Casa South, where we have permits in place to drill. And I'd also like to look at doing a drilling program on our Golden Arrow property in near Tonopah.
Okay, that's great. So, just quick, if you want to, I don't know, you just raised 1.5 million, and I think actually ended up increasing the size of the financing. Yeah, sorry, we just got cut off there. But I was the interview was basically finished. Anyhow, I'd like to thank David from Emergent from MER dot v from for joining us. We'll have an update on the company. As you see, it's kind of an interesting company. It's got a multiple of properties. You know, they've got these joint ventures, so actually a lot of their own capital is not being spent. So I really like it. Like I said, I am a consultant to the company. I have a paid marketing agreement, and also I own the company as well. And yeah, so I'm pretty excited about it now with gold and silver looking to be firming up. With the market cap being so low, these are kind of like leverage plays with, what is probably limited downside in the junior arena. Junior arena always has a lot of risk, just so you know. But this is about the lowest amount of risk with pretty good upside, I think, that you'll find in the arena. So again, I'd like to thank him for joining me. What happened is I was recording this the day the tropical storm was coming through the Bahamas and our power went off. Welcome to the Bahamas. But like I said, we got most of the interview done, so I was pretty happy with it. So yeah, so I hope you've enjoyed it. We'll have more with him in the future. And thanks for listening, and we'll have more opportunities going forward.